The trade war between the United States and China is no longer a distant threat. It's not just a headline or a political talking point, it's a conflict that's actively shaping the world we live in today. Every day the effects ripple outwards, touching lives and businesses in ways both obvious and subtle. It is, honestly, a harsh reality impacting businesses and consumers worldwide. From small business owners struggling to keep up with rising costs, to families noticing their grocery bills creeping higher, the consequences are everywhere. Even if you don't trade stocks or run a company, you're likely feeling the pinch at the checkout counter. Since 2018, both countries have imposed heavy tariffs on each other's goods. These tariffs are essentially extra taxes placed on imports, and they've affected thousands of products, from electronics and clothing to food and machinery. These tariffs are, well, like taxes, making products more expensive. For many, everyday essentials now come with a higher price tag, and businesses are forced to make tough choices, either absorb the costs or pass them on to customers. The US has slapped tariffs as high as 145% on some Chinese goods. This means that products like electronics, machinery, and even toys can cost significantly more than they did just a few years ago. In return, China has imposed tariffs of up to 125% on US products. American farmers, especially those who export soybeans, pork, and other agricultural goods, have been hit hard, sometimes losing access to one of their biggest markets almost overnight. This tit-for-tat exchange has created a climate of uncertainty and tension in the global market. Investors are nervous, companies are rethinking supply chains, and entire industries are bracing for what might come next. This trade war is about more than just tariffs. It's about power, influence, and the rules that will govern international trade for decades to come. Negotiations are tense, and every meeting between officials is watched closely by the world. It is about who will control the future of the global economy. The US and China are not just fighting over goods, they're competing for technological leadership, financial dominance, and the ability to set the standards that others must follow. The US wants to protect its businesses and workers from what it sees as unfair Chinese trade practices. There's a strong desire to bring manufacturing jobs back home and ensure American companies can compete on a level playing field. China, on the other hand, wants to become a global economic superpower. It's investing heavily in technology, infrastructure, and innovation, determined to move up the value chain and lead in industries of the future. It is willing to fight to protect its interests. For China, this is about national pride, economic security, and a vision of its place in the world. The stakes are high, and the outcome of this trade war will have far-reaching consequences. The decisions made today will shape the global economy for years to come, affecting not just the US and China, but people and businesses all around the world. The United States is deploying a complex, multi-pronged strategy in its ongoing trade war with China, aiming to reshape the global economic landscape and secure its own interests. This battle plan is not just about imposing tariffs or making headlines. It's a coordinated effort involving diplomacy, economic policy, and domestic reform, all designed to counter China's growing influence. The first and most visible line of attack is tariffs. By raising the cost of Chinese goods through steep import taxes, the US hopes to make American-made products more attractive to consumers. This move is intended to shift buying habits, encourage local production, and send a clear message to Beijing about the costs of its trade practices. The second strategy is diplomatic, pressuring traditional allies and trading partners to reduce their reliance on Chinese imports and technology. The US is actively working to build a coalition of nations that will stand together in limiting China's economic reach, hoping to create a united front. American officials argue that China's economic practices, such as intellectual property theft, forced technology transfers, and state subsidies, are not just unfair to the US, but also threaten the stability of the global economy. They warn that unchecked, these practices could undermine free markets worldwide. To strengthen its position, the US is offering tariff exemptions and special trade deals to countries that agree to limit their own trade with China. This carrot-and-stick approach is designed to reward cooperation and isolate Beijing economically. At home, the US is doubling down on efforts to boost domestic manufacturing. Investments in advanced technology, tax incentives for factories, and support for innovation are all part of the plan to revitalize American industry. The so-called Liberation Day campaign is a rallying cry to bring manufacturing jobs back to American soil, promising new opportunities for workers and a stronger, more self-reliant economy. This campaign is backed by a series of new policies and legislative efforts that favor US-based production and trade, aiming to create a more favorable environment for American businesses to thrive. Ultimately, the goal is to reduce America's dependence on Chinese manufacturing, strengthen supply chains at home, and create millions of new jobs for American workers. Yet despite these sweeping measures, critics warn that decoupling the two largest economies in the world is a monumental challenge. They argue that global supply chains are deeply intertwined and that the road ahead will be long, complex, and filled with uncertainty. China is not backing down from the fight. It has responded to US tariffs with retaliatory tariffs of its own. These tariffs target key American exports such as soybeans and automobiles. This strategy aims to inflict economic pain on American businesses and pressure the US government to back down. Beyond tariffs, China is actively strengthening its ties with other countries. It is signing new trade deals with nations in Southeast Asia, Europe, and Africa. China is also employing more subtle tactics. It has been known to delay shipments of essential components, such as rare earth minerals, crucial for manufacturing electronics. This strategy highlights the world's dependence on Chinese manufacturing and serves as a warning against siding with the US. China's message is clear: choosing sides in this trade war will have consequences. The trade war is already having a tangible impact on businesses and consumers across the United States and around the world. What began as a series of tariffs and counter-tariffs has quickly escalated into a situation that affects everyday life, from the factory floor to the local shopping mall. American companies that rely on Chinese manufacturing are feeling the pinch more than ever. Many businesses are struggling to adapt to the sudden increase in costs, and some are even being forced to reconsider their entire supply chain strategies. Apple, for example, has seen its stock price drop due to tariffs on its Chinese-made iPhones. The company faces tough decisions about whether to absorb the extra costs, pass them on to consumers, or shift production elsewhere, each option coming with its own set of challenges. Nike, which manufactures much of its footwear in Vietnam, has experienced a similar drop in share value due to tariffs imposed on Vietnamese imports. The uncertainty has rattled investors and forced the company to rethink its global manufacturing footprint. These are just two examples of how the trade war is hurting American businesses, but the ripple effects extend far beyond major corporations. Small businesses, which often lack the resources to absorb higher costs, are especially vulnerable. Consumers are also feeling the effects in their daily lives. Whether shopping for groceries, electronics, or clothing, many are noticing that their dollars don't stretch as far as they used to. Tariffs have led to higher prices for a wide range of goods, from electronics to clothing. Everyday essentials and popular products alike are becoming more expensive, forcing families to make tough choices. These price hikes are putting a strain on household budgets, especially for low-income families who already struggle to make ends meet. For many, even a small increase in prices can mean sacrificing necessities or cutting back on important purchases. The trade war is also disrupting global supply chains, leading to delays and shortages. Products that once arrived on time are now stuck in transit, and companies are scrambling to find alternative suppliers. This disruption is creating uncertainty for businesses and making it harder for consumers to find the products they need. As the trade war drags on, its casualties continue to mount, affecting people at every level of the economy. The US-China trade war is not just a bilateral issue, it is, honestly, a global problem. Many countries rely on trade with both the US and China, and now these countries are caught in the crossfire, facing pressure from both sides. Some, like the European Union, are trying to remain neutral, but this is becoming increasingly difficult. Others are being forced to choose sides, which could potentially jeopardize their economic interests. This pressure is really leading to a realignment of global trade. China is seeking new trading partners in Asia, Africa, and Latin America, offering these countries favorable trade deals and investment opportunities. This strategy aims to reduce China's dependence on the US market and strengthen its position in the global economy. The trade war is honestly accelerating a shift in global power dynamics with pretty uncertain consequences. The escalating trade war poses significant risks to the global economy. The International Monetary Fund has warned that the trade war could shave off a significant percentage point from global economic growth. This slowdown would be felt worldwide, leading to job losses and reduced investment. The trade war also increases the risk of a global recession, which is, a period of prolonged economic decline. Beyond the economic fallout, the trade war is fueling geopolitical tensions. The United States and China are increasingly at odds on a range of issues, from trade to security. This rivalry is creating a more unstable and unpredictable world order. The trade war is a symptom of a broader power struggle between the two countries, with potentially dangerous consequences for global peace and stability. As the trade war drags on, businesses and countries are adapting to the new reality. Some companies are shifting their manufacturing operations out of China to avoid tariffs. They are moving production to countries like Vietnam, Thailand, and Mexico. This trend is known as supply chain diversification. Other companies are investing in automation and artificial intelligence to reduce their reliance on Chinese labor. Meanwhile, countries are forging new trade alliances and strengthening existing ones. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, a trade agreement between 11 countries, is one example of this trend. The future of the United States-China trade war remains uncertain. Much depends on the political will of both countries to reach a negotiated settlement. However, the longer the trade war continues, the more entrenched both sides become in their positions. This entrenchment makes it harder to find common ground and increases the risk of the conflict escalating further. Several possible scenarios could unfold in the coming years. One possibility is that the trade war continues to simmer, with no clear winner. This scenario would result in continued economic uncertainty and geopolitical tension. Another possibility is that the trade war escalates into a full-blown economic Cold War, with the United States and China decoupling their economies and forming competing blocs. This scenario would have profound consequences for the global order. Despite the gloomy outlook, there is still a glimmer of hope. Both the United States and China have an interest in a stable and predictable global economy. The economic costs of the trade war are mounting, and public opinion in both countries could eventually force leaders to seek a resolution. Negotiations, though challenging, remain the best hope for ending the trade war and preventing further damage to the global economy. The path forward requires dialogue, compromise, and a recognition of mutual interests. The world is watching and hoping that the United States and China can find a way to de-escalate the trade war and build a more cooperative and prosperous future. The alternative is a world divided economically and politically, with consequences honestly just too dire to contemplate.